Hi Sarah, my name is Kazan Tandukar. My student ID is CACH1530, and on this presentation I'll be talking about misappropriation of funds. So these are my contents that I'm going to be speaking about in this presentation. So it starts with the introduction of misappropriation of funds, the areas of misappropriation and the resolution for it, contingency and revising of the budget, circulation of the budget, the compliance factors that includes on it, and the audit trials and discrepancy. So, starting with the introduction, what is misappropriation of funds? So, it refers to the misuse of the funds or illegally using the company funds for the purpose of self satisfaction or personal use. Every company has a certain budget for the expenditures which occurs with the business, and anyone trying to breach the company law and use the company's funds other than what it is intended will be regarded as a misconduct and will be liable for a fine up to $15,000. The most common types of misappropriation is the cash schemes, which is also regarded as the cash larceny theft in the books of accounts. So different types of misappropriation of funds include petty cash fraud, payroll fraud, changing books of accounts, over ordering, double check fraud, and friendship fraud. The resolutions, it's basically the two kinds of resolutions for the over ordering fraud and petty cash fraud. For the over ordering fraud, rechecking the stock every day as well as receipts needs to be provided for every order and no excess amount should be allowed. Budget monitoring is one of the key factors in the resolution process as well, and we need to monitor the resource use. On the petty cash fraud, receipts needs to be submitted after every order. The approval of cash should be done by the manager or supervisor or someone that is leading the department. Staff buying unnecessary items with the company should be fired or given a warning as well so that it doesn't happen again. The contingency refers to the emergency plan for the company in case any unknown instances occurs. One of the best example would be the COVID. So the other would be like the staff sicknesses, any natural kind of disaster, any problems with the machine or breakdown, any accidental damage of the staff, as well as any technological malfunction. The best way to deal with contingency is to make the measures in place to handle the situation beforehand. Talking about revising the budget, always have a spare emergency fund ready, adding an extra category to the budget for all existing funds needed, writing up the budget to cover all the departmental expenses and the details about the income expenses regarding the target and the goal. Uh, Regarding the budget, once it's created, it needs to be circulated to each and every member of the company and the department as well. So, some of the ways that can be done is emails, faxes, one on one meetings, or any type of staff or group meetings. It needs to be circulated to the relevant departments such as HR, stock take, or inventory, training overall, accounts, marketing, and sales department. Compliance is basically managing and monitoring all the managers and staff works and making sure the errors that occurs are minimized as much as possible. Three areas of compliance in the workplace are budgets, reporting requirements, and spending rule. So budget is review the over expenditure or underspending. Budget anomalies, it needs to be investigated if it occurs time and again, and reporting the requirements accordingly. That includes ensuring all the expenses occurring needs to be reported. Staff needs to follow the reporting rules very strictly. They need to report if there is any kind of delay or anything has been forgotten to report on the system. Spending rule is basically regarding staff having to go through an approval process before they use any kind of money of the company, and all the receipt needs to be provided accordingly so that staff cannot go on a spending spree for any kind of products that they need for the business use. Diligence is the process to make sure all the information, facts, and figures in the organization has been checked with accuracy. Diligence is checking all the information in the organizations are correct and according to the legal requirements of the business. So these are basically the rules and regulations that all the staff must adhere by, and all the financial statement must be correct without any error as well, and needs to be validated by the relevant supervisor or head of the department. All the agreements and transactions made needs to be considered closely and checked thoroughly. So audit trial contains original sales orders for goods and services. This is usually done if there is some kinds of error on the report of any of the business. It's a copy of the code supplied to the customer. It needs to be maintained so that they are always accurate and relevant. It also needs to be fair to all the parties involved on the trial and needs to be transparent. It should not be biased to any parties. If the audit trials are not maintained, that will lead to any false information in the company as well. And if there is any questions, that might be even hard to answer. Regarding the discrepancy, incorrect payments or report formats, unreconciled cash flows and operating systems, these are various examples of discrepancy. The others include any kind of variance in budgets and phasings, while mismatch in the reports as well as inappropriate authorization. So, in conclusion, we can say that ineffective financial management can cause problems for the organization, such as not being able to detect the problems, which means the finances is not managed correctly and not doesn't have enough depth to help the business with any kind of problem that might arise in the future. And it also shows that having an error in their financial statements and profit and loss statements may create a problem which will not be easy to solve, which might cost a lot of money for the company as well. The best way to avoid misappropriation of fund is to record all the transactions. If the money is missing and not being recorded in the books of accounts, then it is unaccounted for and will be classed as either lost or stolen. And either way, that creates a loss for the business. And any kinds of loss for the business would definitely impact the business on a short and a long term basis as well. So these are my references, and that is basically the end of my presentation. Thank you for listening.